Hey guys, welcome back. Thank you so much for being here. Today we're going to be talking a little bit about what I was looking at in the markets, essentially why we didn't get into a trade and following our plan. Plus, we're going to do a little bit of daily habits that are keeping me focused and learning and something I'm trying to work on this year. Before I get started, don't forget to leave a comment asking a question because I'm gonna do like a live Q&A on your guys' questions. It could be trading related, it could be personal development related, it could be kind of any topic you want. Ask away. I will be answering all these questions in a video, so I'm super excited. Don't forget to leave a comment and ask a question. Yes, today we're going to be talking about new week opening gaps and opening range gaps, and essentially these key levels to look out for, especially when you're trading. You want to make sure that we're looking for these levels because they are important. So let's just jump right into the charts, and I'm going to be talking about these key levels. So today we're going to actually just start on the 1 hour time frame because I really do want to really point out these key levels and why they are essential. So a new week opening gap is basically the close of Friday and then the open on Sunday. I like to have the 4 most recent ones, but right now I believe I have the 5 most recent. So this was 5 weeks ago, 4 weeks ago, 3 weeks ago, 2 weeks ago, and then our most recent one, which is down here. We do have a really small one this week, but it's crazy how we had some sort of consolidation before taking off, shooting through this new week opening gap into this new week opening gap, and look at how we came down into this new week opening gap perfectly before trading higher, ultimately filling in this opening range gap potentially. So we're using these new week opening gaps to kind of determine, hey, like where are some key points of support and resistance levels. So when we were trading this morning and we seen the market come down into this new week opening gap, we could assume that we want to move higher, but if we were going to go lower, we wanted to see some sort of displacement, a break through this level, and really using this level as a support and resistance level. And this morning we can see we completely did that. Look at that fill right there before moving higher. Now we're going to drop down to the 15-minute time frame. On the 15-minute time frame, you see this gray box right here. So this is our opening range gap. How do we find this? We go down into the corner here, click on regular trading hours right here. And you see how we have this kind of gap in the market? Well, this gap is actually the close from yesterday and then the open at 9:30 today. We don't factor in London session or Asian session with this gap. So I like to, let's just delete it really quick. I like to use a rectangle tool from the low to the open of that candle. Use the template as black. And then boom, there we have it, the opening range gap. Now the close on a down close candle would be the low, and then the open on a down close candle would be the high. Kind of is the opposite for the up close candles. So if this was an up close candle, we would actually put it at the low of the candle because that would be the open. If this was an up close candle, we put it at the high because that would have been the close of the up close candle. Now, when we're using these opening range gaps, it's really key to know where they are, only because let's say we're trying to go in for a sell today. We have to assume that the market likes to fill in these gaps. And if we are looking for a sell, we need some sort of displacement away from this gap because the market, as you can see, likes to fill in these gaps almost all the time. Almost. Like we have this small little one here. We did kind of fill it in with this wick. We don't really have one over here. we have like this, you see how this candle closes and then we have this open right here. This candle right here actually closed in that opening range gap. Here we can see the close was up here. This was the open on Wednesday. We filled this in to the new week opening gap before moving lower. That's why new week opening gaps are also important. As we can see, we still have this one to fill in. Same with this one. We did in fact trade up into it, not quite completely filling it in. However, this could be used as a potential target when we're looking for the market to go higher. We could use this as a draw on liquidity because we have yet to fill in this gap. And you know, the markets, they do not like gaps, so they will be filling them in. So that's kind of how I use new week opening gaps and the opening range gaps, especially if we're going short on the market, but we see this large range opening gap. We can assume the market wants to trade into that a bit more before moving lower or completely fill it in. So when we are going against opening range gaps, it is really key to just know where they are and just have an idea. So then let's say the market did stop at this 15-minute fair value gap and traded lower. At least we know that this gap is here and the market likes to fill in those gaps, so it could potentially trade back into that gap. Whereas today, we can use the new week opening gap and the opening range gap as a sort of bias. So we traded down into this new week opening gap before ultimately trading higher, deeper into this opening range gap, potentially trading for these London session highs and this old new week opening gap. That is new week opening gaps, opening range gaps, how I use them, what they are. If you want to learn more about it, let me know, leave a comment in the video. Again, I'm going to be doing like a live Q&A, so don't forget to leave a comment and I'll definitely answer those questions in a video. Now, what I'm doing this year to help me become a better trader is I've actually dedicated 30 minutes a day to studying. I'm going to be studying core content, ICT content, 30 minutes minimum a day, and just staying up to date with the knowledge. And he's posting the new mentorship content, so we have all of that to watch as well. And I think the 30 minutes a day of studying has really helped me kind of see the markets more clearly, kind of understand what I'm looking at. And I'd highly recommend it to you guys too, if that's something you're interested in. 30 minutes a day, it's not that long to just study. Just say, hey, look, this is one of my daily habits. I'm gonna study. So if you want to learn more about my daily habits, I actually have 10 this year. I would like to do all 10 every single day of this year. If you would like to know more about what they are, just leave me a comment, ask the question, and we will be answering those in a video coming soon. So I hope you got something from this video. I'm gonna leave it here, short and sweet, and I will see you guys all tomorrow. Bye for now.